From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB. I'm Nadine Blaney, and it is a pleasure to be here with you on this Monday afternoon, the 9th of the 9th, 2024. Hard to believe we are powering our way through the month of September, getting ever closer to that FOMC meeting. A little bit of trepidation in this local market here after a fall on Wall Street that came through on Friday. A lack of economic data here locally today, although we did get a read coming from China in terms of inflation. Looking forward to a mid-week inflation read coming out of the U.S. ahead of the FOMC meeting. So we're now not going to hear too much from these Fed officials between now and then. But if you were watching the previous hour, I froze, didn't have that Bank of America forecast for rates in front of me, but they have changed their views on Fed rate cut expectations. So the U.S. Economics Research Team is now looking for 25 basis point cuts at the next 5 meetings. So that would bring us to a terminal rate of between 3.25 and 3.5%. So it says that if the Fed cuts rates by 50 basis points in September, markets would likely price in a much faster and deeper cutting cycle than the data warrants. However, he, in their view, or the FOMC in their view, is leaning toward a 25 basis point cut in September. Okay, now I've got that out of the way. Let's just get across some of the key themes from today, and that would be that data coming from China. So inflation did lift in the month. Consumer price inflation, but producer price inflation still very weak and in fact negative. That cut conundrum continues for American officials. Clearly 25 basis points or 50 basis points, because that was sort of a mixed jobs read that came out on Friday. It's still up in the air, but also, having conversations with plenty of people here in Australia. And again, after Michelle Bullock speaking last week, it doesn't feel as if we're due for a cut coming through this year, but some of the big banks here are still predicting that we will get an interest rate cut coming toward the end of the year, because there's just so much still to come in terms of the economic data, and really anything can happen when it comes to inflation. And then I thought it was worthwhile mentioning iron ore. So iron ore falling to its lowest level since I think it was late 2022. Demand pressures remain, according to a note I was reading from Vivek Dar coming from the Commonwealth Bank. Lowest level since November 2022 was that stat. He says that it will be very difficult for iron ore prices to be sustained above $90 US per wet metric ton, because he says of the cost structure of the iron ore supply. BHP's latest economic and commodity outlook really saw cost support waning and sitting between 80 and 90 per ton. So that is something that will impact our local market. Let's see if it did so today, taking a look at some of these sectors and sector performances. Negativity coming from the big banks. I had a really nice conversation with Andrew Dale from ECP Asset Managers earlier today. We were talking about the financials outperforming through reporting season, but he gave me the name of a small SME lender that you might want to check out. It's up online if you'd like to take a listen to that. You can find it under 3 stocks 4. So he gave us some bottom-up quality stock options for longer-term investors. Anyhow, I digress. There are the banks. So that was a pretty poor performer overall. Financials down by 0.6%. Into the energy space, again, oil prices still in the doldrums. And then we got energy down by about 0.5% as a sector. We did have Premier Investments coming out ahead of its results later this month, giving us some numbers, down by 4%. And Super Retail was trading ex-dividend, if you'd like to keep that in mind there. What outperformed today? A-REITs, also infotech, utilities, materials, and consumer staples. So not to paint too negative of a picture out there, we had 6 of the 11 sectors lower today. So Steadfast shares were in a trading halt on media reports that the insurance broker and provider misled clients by not offering cheaper insurance from a rival company. That's on Four Corners tonight. Westpac has appointed Anthony Miller, chief executive of its business and wealth division, to lead the bank from December. Charter Hall Retail teaming up with Host Plus to make a bid for hotel property investments. HPI will be recommending that shareholders reject the offer, so they might have to come back to the table. I mentioned Premier Investments, global retail sales hitting $1.6 billion. That was the stock of the day. I'll bring you analysis of that in just a tick. And Guzman and Gomez, it was on the menu in the office, I noted, for a few of our producers today. It will be included on the ASX 200, and that is from later this month when they do the rebalancing. And I will say that I read a note from UBS on Guzman and Gomez yesterday. They still like the story, but just reckon that it's a bit too expensive right now. In fact, so expensive, they've put a sell recommendation on it, besides the upside risk, it says, to FY23 earnings. All right, let's get a view on markets. Josh Gilbert from eToro is joining me now. Hey, Josh, happy Monday to you. Wasn't meant to be today in terms of share price gains. So tell us what the dynamics were that you were watching today.
Yeah, hey Nadine, happy Monday as well. Look, I think when we're following on from that night that we had on Wall Street, it's always going to be pretty difficult for us to sort of really get away with the green day. I think it was, pretty torrid week on sort of US markets. S&P down by more than 4%. A lot of that coming from this idea that we're going to sort of potentially now see a recession coming through with some of that jobs data, again, sort of leading into our market today. Obviously, when you've got weakness in the financial sector as well, locally, it is going to bring that market down. We also had some weakness as well. You mentioned it there in some of those sort of retail names, Premier Investments sort of coming out with a bit of an update that sort of hit some of those other consumer discretionary names like Lavisa, some of those other retailers that have really done pretty well in the last year, over the last 12 months, and also did well through, much of reporting season as well. So I think that drove things today. We had some data out of China earlier on as well. Again, more weakness there, but surprisingly, a bit of positivity on the materials side, which didn't maybe quite match up if we looked at the price of iron ore today either. So
yeah, okay. So there is lots that we're digesting, plenty that we're waiting for as well. Pretty quiet start to the week in terms of economic data here in Europe, in the United States as well. I think that we just get the New York Fed's monthly inflation survey. So what are the three things that we're really hanging out for this week in markets, Josh?
Yes, I think we had the sort of the first lot of data from China today. We had that CPI data, saw it rise by 0.6% year over year. Just shows that we did lift from last month, sort of moving slightly away from deflationary territory, but still showing that the region isn't doing enough. We aren't seeing household spending. Clearly, there's still a struggle going on in the economy. There needs to be more support there. So I think we're going to get more data throughout this week as well. We get sort of manufacturing updates and a bit of a dump from China as we usually do. Locally, we'll have consumer confidence that comes through tomorrow. Again, it's always a good indicator into sort of, how consumers are ultimately feeling. We've obviously got rates that Michelle Bullock has reiterated that are going to stay where they are. Not sort of envisaging a cut this year. So that's going to be sort of a really interesting sort of survey to keep an eye on. It actually rose last month. It moved to a sort of a 6-month high. Maybe that's coming from the back of some of those cost of living, measures, tax cuts, energy rebates, etc. So that will be an interesting one. And then obviously US inflation data. This week as well is probably going to be the key one to watch, especially after that jobs number. Essentially, we didn't really get much from that jobs number.
Yeah.
I don't think it really shifted whether it was 25 or 50 basis points, which is what I think we probably wanted from that. We're probably still where we were beforehand, still probably sat in the 25 basis point camp, which I think in my view is a positive. But markets did, initially react to, the data. I think it was probably going to really come from this view that it was the revised jobs data that I think probably sparked things a little bit. But yeah, that inflation data from the US is probably going to be the key focal point of the week. I don't think there's going to be anything too huge in it, but it might give us a bit of a signal on what the Fed is thinking, but I think it will just solidify a 25 basis point move.
Got it. Now we've got Apple out with the new iPhone. I can probably guarantee we'll hear lots about AI and AI features and how it will be incorporated into the iPhone ecosystem. Any thoughts?
Yeah, I think, look, you've hit the nail on the head there, particularly with this AI side of things. It is their first, AI-driven iPhone. We know that they haven't had the best time as of late. iPhone sales have slowed down. They've faced a lot of competition. China, mentioning it again, but again, that has been a key region for Apple, over recent years. But it has obviously struggled recently. They're expecting to actually see some improving numbers there and sort of accelerating growth. But when you look at that inflation data today and see that consumers still aren't spending, maybe hard to envision that is sort of going to come to fruition. But maybe the latest tech and some sort of AI features might drive that. Always an interesting event, always great to get some insights. Will it be, a little bit lackluster? Will it be sort of one of those sell the news events? We'll sort of have to wait and see. I think they'll deliver. I think they'll come through with some great features, and I think investors will be excited by sort of the AI theme. And they've always kept their cards close to the chest when it comes to AI, but I think they'll pull it out of the bag, and I think we'll see a positive reaction from Apple this week.
Okay. Where is the interest on the eToro Australia platform, Josh?
We're seeing quite a bit of interest, I still think, in some of the sort of the resources side of things. We spoke about China and iron ore there. I think the contrarian investor is sort of really coming in there. When we look at some of those miners, a lot of them falling to, some levels that we've not seen for a long time. Obviously, as we know, they pay fantastic dividends. I think that there's a view that there's only so far that China's economy can sort of really get to before they do step in. That data we had today maybe supports that. The data we get this week maybe supports that we are going to get that rate cut this month. We are maybe going to get additional fiscal measures as well. So I think we really are seeing investors look towards those resources names and sort of maybe seeing a bit of an opportunity there to sort of pick up some of these companies, especially the quality companies. I think, if we look at Rio, if we look at BHP, they sort of really stood out amongst some of the other names that struggled in the material sector throughout reporting season. That comes back to just being bigger, lowest cost producers in the world, sort of managing to navigate these periods better than others. But really, it still is a contrarian view. I think you have to say that the commodities market is really struggling at the moment. You had Goldman Sachs downgrading their view on the likes of copper last week as well. So there is a pretty negative view on commodities more broadly at the moment. So we are still seeing contrarian investors move there. But yeah, I think it's going to certainly have to be a long-term view for a lot of those names for the time being.
Okie dokie. Hey, Josh, nice to chat. Thank you for getting us across markets today, giving us a bit of a look-see to the remainder of the week. Appreciate it.
My pleasure. Have a great week, Nadine.
You too. Josh Gilbert joining us from eToro. All right, stock of the day, as I mentioned, was Premier Investments. We spoke with Nathan Samsundaram from Deep Data Analytics and Scott Phillips from The Motley Fool. Here's what they had to say.
I think the cycle will catch up to everyone. Premier is one of the better ones. It will hold up really well, but it's cyclical. It's a retailer. As good as he is and as diversified as he does have in his business model, it will all see some slowdown. So the market gets too excited. It's, the old adage is you buy retail when interest rates are going up, you sell retail when interest rates are going down because you're not spending enough. So the theory here is, long-term investors, if you got in cheap, it's a hold, it's a high-quality business. But if you're trading the multiples and you're trading the cycles, this is a sell.
So many unknowns. I would suspect the risk is probably not as big as the potential reward. I suspect that when Peter Alexander and Smiggles trade post this slowdown, as Nathan's already talked about, they may well command higher multiples than the combined business. So I wouldn't rule out making some money at today's price. But there's so much uncertainty there. We don't know what's going to happen with those transactions. It's a hold for us.
Yeah.
One sell, one hold for Premier Investments, PMV, and it releases its results later this month. So we'll keep an eye out for that. Keeping an eye on what moved this market in terms of percentage gainers and losers. ARB looking pretty sweet by the end of the session. It has updated on a U.S. business making an acquisition. And so clearly the market liking what it heard, up by 6.25%. Chalice Mining up by 4%. Linus looking good. Liontown Resources and Audinate. Audinate was featured on Friday's edition of The Call with Junbei Liu and Mark Moreland, if you'd like to go and take a listen to what they had to say about that one. Super Retail traded ex-dividend, and Steadfast with that media investigation going on by the Four Corners report in the ABC, Corporate Travel and Johns Lyng. Into the smaller end of the market, and PointsBet Holdings up by close to 15%. AI Media Technologies putting on 10%. And the laggards include SmartPay, which was down by 8%. And Maxi Parts in the big business of parts and stuff for big trucks, down by close to 8%. So I did mention that we've got a pretty quiet night. Consumer inflation expectations coming through in the United States, U.S. consumer credit as well. Now we've got in Europe, let me just check in. Yeah, not a lot happening in the European sector at all. We do have U.S. CPI, though, on Wednesday, and ECB, that's due on Thursday. So yeah, be attuned to that. And tomorrow, we do get some data here locally. We get the value of dwellings, consumer confidence index. We get some of these monthly confidence reads, so business confidence and conditions, so the NAB business survey coming through as well. International trade coming, and we have more of those companies trading ex-dividend through the overnight period. And just as we head toward the London Open, I think it's worthwhile pointing out that we've got the US dollar firming. We saw the Australian dollar lifting slightly above that 66.80 mark, and that is despite still pressure coming through in terms of the iron ore price. Commonwealth Bank, though, saying that in China, given that inflation read, still showing anemic consumer demand, because that inflation, it was up monthly, but that was on bad weather, causing food prices to be higher. CBA is saying that further policy support is still needed to counteract some of those deflationary pulses coming from China. That's particularly evident in producer prices right now. And it's forecasting further rate cuts from the PBOC, possibly as soon as this month. So just a quick recap of the S&P ASX 200 close, now that we've seen the last of the day's trades go through. So the COB Australia Index ended lower, so did the S&P ASX 200, off by 0.3%. Around the region, we did see negative sessions coming through in Japan as well. Actually, more pronounced losses than here after a weak GDP second quarter revision. Chinese markets are coming under pressure, including the Hang Seng right now, which is off by 2%. E-minis, though, still positive in the United States. And I'll note that Bitcoin is up by 3.5% as well, just after market close here in Sydney. Look, there are so many interviews to get caught up with on our website, ausbiz.com.au. If you're listening to us in podcast form, we'd love it if you could check out our website. So much valuable content for investors there. And for those of you watching on ausbiz.com.au, we will see you when we are live once again, 9:45 tomorrow.